Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Everybody, welcome back to another live stream. We are back in the studio for another day of trading, analysis, market setups, and all sorts of good stuff. We do have some unemployment claims coming out this morning, which should be impactful to markets. We're going to be taking a look at several things together, but of course, unemployment claims being a big one here today. As we get started into the day, what we've got is we've got some indices making slight moves higher. Whereas the dollar index, let's take a quick look at the dollar, check the markets here this morning. We've got the dollar index kind of flat on the day. Here's your 4-hour view. You can see not making too much of a move up or down. And yeah, so we are kind of seeing a little bit of normalization on the dollar index. This might be, anticipating the NFP report, which comes out on Friday. So again, what I mean by that is market participants oftentimes will kind of consolidate ahead of a big news event such as NFP, where jobs data is very, very crucial to giving us an idea as to what the Fed may do next. If the job market remains hot, that could contribute to inflation, and inflation could contribute to the Fed saying, hey, we need to raise rates or keep rates high for a long period of time to have restrictive policy. Yes. Are we having screen issues, guys? Give me 1 second. I'm resharing my screen. That's weird. I can see my screen from this end. Can you guys see my screen? Try now. Hopefully you can see my screen okay now. No screen shared. Okay. Sorry about that, guys. Yeah, I think just a little bit of a bug there, but we are all set. I think. Okay, cool. Thank you, guys. All right, so taking a look here at the dollar index, like I said, we're pretty much flat on the day. The indices have some very slight gains when you take a look at things like the NAS. We are pushing up into a level of potential resistance, so keep an eye on this. Again, some good gains off of the bottom if you're watching indices. There's a couple things at play that I'd like to direct your attention to, and I want to talk about the bull case. The bull case for the NASDAQ, the bull case for the S&P 500, the bull case for gold. Are any of these things possibly going to find bottoms and start reversing? Let's talk a little bit about that. If we're looking at the EDGEFINDER, the first thing I will say, the data that we look at is really, really important to what decisions I end up making with my trading. So let's see. If I take a look at this, if I take a look at gold, right, for example, gold is a bearish reading on the EDGEFINDER right now. And we could isolate this. I want to show you guys, actually, we worked really hard on this yesterday. I've been in the thick of it on the EDGEFINDER dev stuff. I do a lot of the UI and kind of brainstorming the big ideas for the EDGEFINDER. In terms of development, that's kind of my role, my main role. And then, of course, we have Frank, who is also big picture brain ideas for what we want the EDGEFINDER to do and logically the algorithm behind it. We work on that together. But then we also have a dev to help us with kind of the development of, certain technical components. Anyways, you guys don't need to know all that. The point is, when we take a look at gold, I want to talk about where we're at ahead of the labor statistics on Friday and in reference specifically to gold. So as we come in today, we have jobless claims. This is data that should be coming in soon. In terms of NFP, the previous go around, we saw a tick up in job creation. That was bullish for the dollar. And in this case, of course, you can see it's bearish for gold. And then when we take a look at unemployment also ticked up, which can be confusing at first, but it involves the participation rate of the population. That's why these two both can move up at the same time. Anyways, the unemployment is kind of bullish. So we have a little bit of mixed sentiment in the labor market in its recent push on gold, but we will get some clarity on that when we come into NFP tomorrow. So keep an eye on that to see if this gold market is going to finally make a move one way or the other. But it's been really, really tough for gold bulls here recently. And again, I want to talk about the bull case. Is there anything that could? Well, again, what we'd want to see, guys, for bullishness on NFP is we would want to see a decline in the number of jobs created. Because if that happens, the dollar will likely weaken, which could give us a nice push to the upside on gold if you're a bull. Same thing with kind of the indices. They're acting similarly right now. And if you talk about unemployment statistics as well, you probably want unemployment to raise higher if you are a gold bull. So those things will impact the moves in the markets tomorrow big time. So just a little bit of a heads up there. In terms of technical analysis, take a quick look at gold with me. We are still sitting at this supportive level at the 1815 mark. This level seems pretty stubborn, but there's still a lot of red in this chart, and momentum favors the sellers. I'll tell you what, I am not buying it myself. I think that right now, gold has a lot to prove. It has a lot of headwinds. And while I think, maybe if you're a longer term investor or trader, maybe you're getting some value opportunity here on a longer term basis, that's not what we're really here talking about today. We're talking about trading, and trading wise, I think gold short term remains bearish, but it is probably due for a pullback. So if we do get that bounce, in my opinion, the sells look more attractive than the buys. That's just my take on it. Let's keep going. I want to talk also silver just for a moment. Same story. Silver has gotten beaten down real bad with this. Oil, same thing. Oil bulls got wiped out, which of course I did actually have a bullish trade on the oil market. And I'll show you what I ended up doing with that just to be transparent. I took a loss on oil. After price came down, I entered into a long position right around here with a stop loss below the lows. So my stop loss did end up getting triggered, even though we moved initially in my favor by about a 1-to-1 risk to reward ratio. Obviously, in hindsight, I shoulda, coulda, woulda trailed that stop loss to break even, but I didn't. And I ended up taking a full loss when the trade rolled over. But here's where the trade management stuff is really important. Yes, I took a loss on oil, but look at what I could have taken a loss on. If I was just stubborn with the markets and I didn't put a stop loss on my trade, I would have been in much more of a losing position right now. I took a really small loss on oil. I tried to buy it at the support level. The support level has been holding very well, but conditions seem to have changed. A lot of, if you want to cite something for what caused this breakout to the downside on the fundamentals side, yes, technically it looked good. So technical analysis wise, looked like it was relatively strong. We had a really strong area of support that multiple times. I actually caught this trade. Some of you guys will remember I caught that trade very well, and I ended up making some good money just off the technicals and the fundamentals at that point. But what's happened since has been yields have continued to press higher, and that makes fear around the world for potential recession, especially in places like the US, which we monitor that the most closely here on this show. But the point is, recession fears drive the oil price down because, again, oil thrives in roaring economies, right? People economies demand more oil when things are good. They don't demand more oil when things are bad. So anyways, a little bit of fear around this rising 2-year yield and 10-year yield. Actually, the story has actually been the 10-year yield. The 10-year yield has been flying high. By the way, this puts upward pressure on the dollar yen. As again, in terms of bond opportunities, people might flock more to the US, which drives the dollar higher, etc. Anyways, US 10-year come down off those highs by a little bit, but this still a pressure to the downside in some degree to the oil market, and also in terms of just dollar strength. This is really what is driving it. At least right now, that seems to be all the rave. Again, back to the dollar index for a moment. Let's talk about this. Let's see. Nick, did you give up buying oil? I think it's a nice dip for buying. I just am paused for now. I don't like the chart right now. I think maybe if you're more of a, mid to like a midterm investor, trader, like as in maybe a couple months trade, that could be a nice pullback, but for me, I like the momentum trades on a little bit lower time frame than that, and that's just personal preference. If it starts picking up momentum again, I'm a momentum trader, and I also do some kind of mean reversion options trading as well. So anyways, let's see in terms of the dollar index, this thing remains strong. However, the crux of the conversation here is all about that NFP jobs numbers. Again, if you're making a gut call on the dollar right now, it's tough because we have such key information coming out on Friday. And while the dollar index, I guess the path of least resistance does remain up, I can't say, oh, I'm absolutely certain that the market is going to rally up from here due to NFP on Friday. But technically, it does look, and I mean technical analysis wise, it looks strong. You have support after a nice pullback into this area. It does look like to me the path of least resistance is to see the dollar continue its march higher. I would, however, admittedly like that dollar to crack lower. It would be nice for some of my indices positions, and it would be a nice relief for gold buyers out there as well if that does happen. Gold, I'm sorry, breaking news, guys, I missed it. Let me just we'll just go right into it. So we did get unemployment claims here just now, 207K compared to the forecast of 211K. This is going to cause very little movement in the markets due to the fact that the markets saw exactly what they wanted pretty much, or what they expected. Now, I will say this, guys. When you get news that it's exactly as expected, it's like when you have just another normal day at work. It's not anything super exciting. Whereas when you get surprising news, it's like when the fire alarm goes off at work. Suddenly it's like a more surprising day. Like the point is, news is only as impactful as it is surprising. So today we're seeing a slight tick to the upside on the dollar, but for the most part, pretty much just kind of the same story, and we probably continue to turn our attention to NFP. Speaking about NFP, let's do some NFP prep together here this morning. It is probably a good time to talk about that and talk about some currency pairs, indices, etc. So first of all, I want to show you, again, I mentioned the labor market. If you're somebody who is watching gold, I like to quote and show you guys this data here. This is the labor market data that we pull in on the EDGEFINDER. And the EDGEFINDER, what we specialize is, and we pull in data automatically. We make it easily decipherable and consumable, I guess, for traders. Anyways, when we take a look at NFP change last time around, and we will probably look at these numbers tomorrow, of course, with NFP. Last time around, we had the current latest is 187,000. And when it comes to NFP change this time around, we are expecting lower numbers. And that is the question of whether or not we will get those numbers. We want to see this number. If you're a dollar bull, you want to see it go up. If you're a dollar bear, you want this number to come down. If you're a gold bull, if you're an index bull, you want to see this number cool off, because that's what the Fed wants in order to stop its interest rate tightening cycle. Anyways, let's keep talking about that. Tomorrow, we'll talk more about the numbers and all that sort of good stuff. But let's get back to the charts here for a minute and talk about some of our charts of the day. Again, S&P 500 still can't seem to find much of a bid, despite entering a time of year that is historically pretty strong. And I want to also show you guys something on the Smart Money Tracker. If you don't have the Smart Money Tracker, it's probably one of the most popular tools that my company, A1 Trading, builds. We are a software company in Atlanta, Georgia. We build tools for traders, as you're seeing on the screen. We custom build these things to help traders spot more opportunities and better opportunities in the market. And I want to show you something in terms of the SPX. This is very interesting stuff. You've got the S&P 500 with a net change last week. Week over week, we saw 5.5% net move in the bullish direction. Seems like there's a little bit of an appetite to possibly be picking up the S&P 500 as we enter into Q4, which is seasonally one of the strongest parts of the year for the stock market. And so I think that that's kind of an interesting story. Gold, not so interesting. Take a look at gold. You still got bearish presence on the week-to-week data. You can see a minus 3.56% there. What's that telling us? Well, that's telling us that in terms of positioning, there was a bearish shift by 3.56% week over week from we're not just polling everybody, we're polling the people who are the professionals in this industry. The big money is moving bearish on gold as of the latest filing. And when it comes to the S&P 500, they're moving bullish right now. So, or in the last filing. So very telling stuff to say the least. You also have the dollar in there, which kind of remains slightly down, not too significant. But of course, other things like US oil, still slight bullishness there. On the last filing. Anyways, I will say this, guys, if you would like access to our data, you can pick up a copy here by sending us a direct message using the link that's being dropped in the chat. If you would like access to the tool, please feel free to message us for pricing details, for different options that we offer on our software. And one of my team representatives will help you out. Yeah. H-ball out, I'm with you on the options thing. I am an options seller through and through. I like trading IWM. I like trading DIA, like the Dow and the Russell. Just what I like personally. Anyways, yeah. So anyways, back to the charts for a moment. The S&P 500 still looks weak. I think that, if it starts getting down to this 4160, it's going to be hard not to touch it in my opinion. I mean, that's starting to become major support off of a higher time frame daily chart level. So I'll continue to watch it, but I am curious to see how the S&P performs in the coming weeks. Let's take a look now at EURUSD. This is, of course, a major currency pair, the euro dollar. The euro dollar on the daily chart just looks regimented downside. And in my opinion, this is a trend you don't want to fight. I have a rule, when something is trending lower on the daily chart, I try not to be a buyer. When something is trending higher on the daily chart, I try not to be a seller. I find that to be an incredibly difficult trade. But when we take a look at the euro, again, the path of least resistance, it doesn't take a genius to pick out that this thing has been bearish. And, we've remained bearish on this. I believe that on the top setups page, we still have a euro bearishness factor. Let me just double check that. Euro USD. Where is Euro USD? Did it leave? Oh, no, it's right here. Very bearish. Euro USD -7 score. So we're scoring low in economic figures, as well as actually for the currency traders out there, let's do something real quick. So we're just going to go category and we're going to go major currency pairs. So for dollar cross traders, we'll pull this data up. Take a look at this. So this is our bias based on the different metrics and scoring system that we use. So this is considering things like the labor market, interest rates, inflation, GDP, trend, seasonal data, retail sentiment, the commitment of traders report. It's giving us from all that data a bias to consider. Now, of course, this bias is not a certain guarantee by any means. Nothing in markets is guaranteed. This stuff is incredibly complicated. It's incredibly complex, the way markets actually work. But our goal with this software is to simplify the process a little bit, right? We're trying to make it slightly easier to spot opportunities. So you're going to find me generally looking, when I'm talking currency pairs, I'm going to be bearish on things like euro dollar, pound dollar, Aussie dollar, Kiwi dollar, and I'm going to be bullish on the dollar yen, dollar Swiss, dollar CAD. The point is, right now, and for several weeks now, we have been bullish USD. That's kept me out of going long on gold. I've been mostly on the short side. Frank shorted gold a few times, right? Frank is my trading colleague here at A1 Trading and the co-developer of the software that you're looking at. We've been mostly dollar bullish, and we don't fight trends here. We observe data and trends, and we go with the flow until it's time to end that cycle. So when I take a look at Euro USD and it's pulling back to this trend line, it's pulling back to levels of resistance here. When we look left, for me, this is this is more of a bearish chart than anything else. And I think that, if you look at this and you say, this thing is, too far down, it can't possibly keep going, it's got to start going up soon. The problem is with that line of thinking is that you're right in line with what retail traders are doing day in, day out. I'm going to show you this. This is a powerful chart as well in the EDGEFINDER. You just head over. If you do have a copy, just go to retail sentiment right here. Click retail sentiment. It will show you from the data that we pull from a couple different sources here, different brokerage. Retail traders right now are really long the Euro USD. 64.36. That's not incredibly polarizing, but it is polarizing enough to mention. Retail traders, they buy downward trending charts and they sell upward trending charts. So this euro, they are buying this thing, right? This has been a tough buy and they've been staying long for quite some time. So in my opinion, path of least resistance here on the euro is bearish. Now, I'm not telling you, oh, that's a certain guarantee that it's going to be bearish. We're not fortune tellers here. Trading is all about probabilities and statistics. But if I take this trade over and over with proper risk management, that's where I'm kind of looking to trade profitably. It's not over this next trade I'm going to be super profitable. It's over the next 1,000 trades that I do. I've been doing this for 8 years now. It's about time allowing your edge, allowing your back-tested results to play out over a substantial number of trades and being patient enough to stick around for when those losing streaks happen. That is why most people quit trading, is they have a couple losers where they put way too much size on a couple trades and they say, oh, this stuff is a scam. It's stupid. I'm out of here, right? It's all about letting your edge play out over many trades over time. Gold following someone in the chat says, here's the thing about gold. Like I said, if we are able to break through this level of support around 1815, I think you get more downside. And that is purely the idea that we have a major support looking left. And after that level, if it does break, there's not a whole lot of stuff to look at for much further, right? This is a daily chart. So keep a close eye on this. And what's going to be the catalyst here? What is going to be the catalyst that drives gold through those lows? In my opinion, it's NFP if we get hot jobs numbers. Now, I'm saying that I don't know what NFP is going to do. I'm not saying, oh, NFP will drive the price underneath. I'm saying if we get a strong jobs number out of the USA tomorrow, what is likely to happen is the gold market breaks underneath with dollar strength rushing in. However, if jobs numbers come out cooler than expected in the US, the Fed is going to like that, and the market is going to say, okay, that dollar doesn't look so hot. Maybe we start to see a reversal. Tomorrow is your day to watch closely on the gold price. I've mentioned this several times, but keep a very close idea or close eye on this. If that jobs number comes out hot, guys, I'm telling you, this is where every single NFP, CPI, FOMC, PCE, PMI, big numbers that come out of the US, traders love to gamble on that stuff. I'm telling you guys, that is one of the most foolish ways to trade. What people will do, and again, I'm saying this because I thought I was cheeky when I tried doing this years and years ago. What people will do ahead of a news event is they will put a buy stop and a sell stop. They'll say, oh, I'm going to buy stop here and I'm going to sell stop here. The idea being either way is it's going to move straight down or straight up. So I'm going to be in a profitable trade, right? Markets are easy. If only it was that easy. Wouldn't it be nice? We could all just print money from home, but it does not work like that. What happens is the brokers widen their spreads dramatically. Please do not do that. You are almost certain to lose money as the brokers widen their spreads dramatically ahead of that. Not one broker, all of them, because you can't be in the brokerage industry and make a foolish decision not to widen your spreads ahead major news events that you know are going to move markets dramatically. Anyways, with that said, guys, we are going to now take a quick break, and then we're going to come back for Technical Thursdays with Miko and Marco. We do this every week. We get technical. We take a look at some charts here, and I'm excited to see what charts they have for us to look at today. So we'll be right back with them just after this.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back. Market giving back a little bit of its gains here as the market just gets open over in the US. We've got Miko and Marco joining us now on the show to go over some technical charts. Hey guys, how's it going?
Hello. What's up?
Good to have you guys both back on, and I want to go to Marco, you first. In terms of all of this, this craziness that we've had, the VIX is up, and the VIX being a telltale of market volatility across the board. Usually, when this thing is up, we've referenced this a couple times together in our conversations. When the VIX is up, markets are moving a little bit more aggressively. Marco, what are you watching here today? I know you've got your set of pairs that you trade. What are you looking at?
Yep, sure. Let me just share the screen.
Yeah.
Okay, trading view. Okay, so for me personally, the dollar pairs are being a bit range bound right now, but the Japanese pairs do have a bit more potential, I would say, but I would need a breakout. So a quick summary would be euro and the US dollar. I'm waiting for a breakout of here. I'm not seeing any sort of momentum currently. It's just kind of being a bit flat. But yeah, potentially we will get a trend. So this one is not on my watch list. Euro Japanese yen, like most of the Japanese pairs, had this huge news candle with a huge wick on the bottom and a huge body as well. I think it was around 270 pips. So after it, I wanted to see the price immediately continue, which we unfortunately did not get. Instead, we are just ranging around. So for this pair, I expect a larger, wider range as well. What I would like to see for the market to pick a direction. I would like to see it show me some nice momentum. So usually I like the news candles, but what I want to see after a news candle, I want to see price continue and trend straight away. Aussie US dollar showing a bit of a V reversal right here. Usually when we get this sort of a V formation, we get a range and then we continue trending to the downside, let's say. So I'm waiting for a nice push down. This is what I'm waiting for. Then we have the Aussie and the Japanese yen, same as the Euro Japanese yen, again news candle, but no trend after it, just a wide flat range. The pound is looking the same as the euro and the US dollar, so I'm being more patient. And New Zealand Japanese yen is also the same as all of the other Japanese pairs. So to be honest, for me, potentially the Japanese pairs may give us a move because this was a very, very large news candle. But I'm looking at the Aussie and the US dollar, seeing if this sort of a pattern will play out. If it will, I would look to sell. So that's about it. Nothing much currently for me in the markets. I had an active Monday. To be honest, I took some nice trades on Monday, but now things seem to be slowing down a little bit. And to be honest, I'm waiting for the next week. I'm not really seeing much potential in the next few hours. It's soon gonna be Friday as well, market close. So let's see the next week.
Okay. Yeah, Marco, and we'll maybe come back to that concept you just mentioned about taking some trades earlier in the week. Maybe we can ask for a little bit of some more details on that. I want to give Miko a chance just to, in terms of setups and as this market is moving, what are you looking at, Miko, right now with everything going on?
Yeah, so my main focus is still with dollar pairs. Still pretty bullish on DXY, still pretty bullish on dollar. So pairs like Aussie dollar, USD CAD, gold, silver, my main interest at the moment. I did miss some sells earlier today on Aussie dollar. It just happened just outside of my trading hours. I normally start trading around 8 a.m. UK time, and I got the signal this is bearish engulfing on the retest of this level here, which was at 7 a.m. So it missed the entry for that one, but despite that, I'm still looking at some more shorts to the downside to these lows. I'm still looking at Aussie dollar coming back to this low here. So for the foreseeable future, I'm basically just looking to short the market when I get my next opportunity. So potentially, if we were to come back and retest it, I'll consider looking for some entries if I see what I'm after. But yeah, I am similar to Marco, looking at some more downside for Aussie dollar CAD. I'm looking at buys as well. This one's been pretty bullish. I'm looking to see if we can get a retest of this lovely daily level here. As you can see, we just got the breakout of that recently. I'm looking for price to come back into this area next. So if I can see some retracement before that, that'll be brilliant. And looking to take USD CAD to the upside, like we've got a pretty big inverse head and shoulder here, and we just snap through that neckline. So if we can come back, pull back, retest some structure, I'll be more than happy to take some buys back into that high there. So still buying side here of dollar strength. Likewise with silver and gold. Silver just snapped through a very big level here. So I'm looking at price coming to the next kilo, which will be this area here. So likewise, I want to see some pullbacks for silver and some continuations. At the moment, silver and gold has been very bearish. We haven't really seen much of a pullback. So I'm kind of just waiting to see what they do next. They could just break to the downside. I mean, they're still pretty bearish. They're moving sideways now, but I wouldn't be surprised if you just see the push sideways and another push back down. But I would like to see silver come up first and give me some opportunity to short it. Same thing with gold. I think gold might be testing the support level almost there, maybe a few pips away. So likewise with gold, I want to see retracement to this particular area because yeah, gold's just been so bearish. I want to keep looking to short it to the downside, but we're coming to some support now. So I want to back away, wait for some retracement, and hopefully some sells later on. But yeah, essentially that's what I'm looking at, still keeping up with the dollar strength.
Yeah, I like that. And I think, you mentioned silver, not often talked about, but I do like that chart a lot as well on silver, that big break to the downside, that possible pullback. And, when it comes to gold and silver, it's been kind of a frustrating time for a lot of traders who, you see gold make this massive move to the downside, and I don't have it on the short side. I wish I did. It would be really would have been a remarkable week for me, but I didn't have that either. I've got the same markups, and this is the reality of trading, guys. It's not always that you're in these great moves, and sometimes you have to watch from the sidelines. And honestly, it's not always fun. So the idea being, if we get that pullback, that's something to consider in both Miko and my own idea. I like that as well. The other side would be, I mentioned this just before you guys came on. If we get jobs numbers that are really strong, it's possible that we could break out, get through the lows. So yeah, I think also one thing to say too about the Japanese currency pairs, the Bank of Japan stuff that happened, to your point, Marco, that candle across the board, the yen stuff that we saw, the yen stuff was just absolutely wild. And you mentioned it being a news candle. It is absolutely a news candle, but one distinction I would make from perhaps like an NFP or a CPI number is that this was an impromptu kind of announcement or thing. It wasn't necessarily like, okay, we have numbers coming out at 8:30, and then that's when we're going to get the reaction. This was like a rumor that got kind of like came out, some conversation that was brought to the market, and suddenly the market reacted. So sometimes you get those really messy news candles during those sorts of events, and that's kind of what we got. We got this huge move, and it wicked all the way back up, and then it came back down. And so the yen crosses are kind of wild. I've made the point, and I want to get both you guys' thoughts on this, on like the yen crosses. This 150 mark seems to be a point that the Bank of Japan is not comfortable with. They don't like the exchange rate. It makes their yen very weak to purchase things and do business in dollars. It's really uncomfortable to them. If this level, however, breaks, even despite their willingness or wantingness to buy their own bonds to support their currency, if it breaks out, the uptrend, as much as it seems like it may have already made a move, could continue to be explosive to the upside as people maybe lose faith that they're able to intervene and actually disrupt the currency exchange. But it'll be interesting to see how that plays out. But I want to ask Marco, any other yen crosses that you want to share with us? And then I'll go back to Miko, because I know there's just several to talk about. So Marco, I'll let you go first.
So for me, regarding the yen crosses, again, I trade only 3, and those are EJ, AJ, and the New Zealand Japanese yen. So, and I'm focusing only on the last 3 to 5 days of price action on the 1-hour chart. So I'm not looking at any support or resistance, any major support or resistance. But from what I can see, again, I was actually in a nice short trade, for example, on the Euro Japanese yen, and it looked very promising that maybe the downtrend will even continue at this point. But then we saw the news candle happen. So I saw this ascending channel, after which we usually expect a nice downtrend. And it was a downtrend, but it was not as big as they come. So I kind of wanted to see it continue. Unfortunately, as you said, the news came out of nowhere. No one really expected it. So now my whole analysis of the market is kind of negated. So I kind of, at this point, ignore anything that happened here because this is such a big news candle. So for me to even start looking at anything, first I need to see the break of this major high level. This is the first red line, or the bottom, so the major low level. And once we break, I will see, will it give us a break and a straight retrace and continue ranging around, or will it actually pick a trend? So I believe because this was such a sudden news, it was not like you said NFP or something like that. It will take some time for the market to actually think about it, for the bigger players to make some decisions, for the market to digest the news. So maybe we will have sort of a delayed reaction. If that does happen, if we get sort of a delayed downtrend or a delayed uptrend, I will of course be very interested to sell, but I need confirmation. That's why I'm saying on the especially Japanese pairs, I think this is not gonna give me any sort of an entry this week. Potentially, I would need to wait for the next week for a few more candles to develop and for that trend to actually start. So for now, I'm leaving the Japanese pairs alone, all of them.
Fair enough. And what about you, Miko? What do you think with all that BOJ stuff, the Bank Japan? Any yen crosses look attractive to you?
No, I'm a similar situation to Mark. I'm kind of letting the yen pairs do their thing, because after that big kind of wick that we had, it's kind of difficult to gauge the market, because essentially I want to see momentum. So similar to Mark as well, I want to see strong momentum, price, give me a good bullish trend, bearish trend, vice versa. But when we get big wicks like what we've seen with the yen pairs, it's kind of like the market's 50-50. We've had a lot of momentum to the downside, but the market isn't really sustaining that momentum. It's had a hard time doing that. If we went and filled the wick straight after, then that would be a good sign. And then we'll probably expect to see more downside off the back of that. But quite a lot of them, euro yen, Swiss yen, pound yen, dollar yen, we've had a hard time trying to fill the wick. So from my perspective, I'm kind of staying away with the yen pairs and waiting for a bit more information, and then I can make some judgments. But my main focus has been dollar pairs. I mean, yen pairs look good at the start of the week. I was actually looking to short a couple of them, but I didn't get the entry, and we had the intervention, and now I'm kind of just backing away. So I'm waiting for them to either reverse or keep going, and then I'll look to follow the trend on some pullbacks.
Okay.
What about you, Nick?
Go ahead, Marco.
What about you? So do you have any trade ideas for the news candle? Do you see any potential setups forming after the news candle?
Yeah, I think personally, the yen situation in terms of a kind of a central bank idea, it seems to me very similar to the absolute chaos that we had. And I've made this point a couple of times on stream, the chaos that happened with the Swiss National Bank back in early 2015. If you ever want to just see the scariest chart ever, just go back to 2015 and take a look at what happened with the Swiss National Bank. As I zoom in here, you can see this is one of the worst, most devastating candles, I think probably in the forex market's history. What happened here is a central bank intervening can mean one of two things. They can be, finding ways to support or weaken their own currency for the various pros and cons to each one. Well, the Swiss National Bank, what they said is, hey, we don't want the currency exchange rate between the euro and the franc, the Swiss franc, to go down anymore. So we're going to hold at 1.2. They're going to support the currency. They were vocal about 1.2. So it seems like an obvious trade. You have the backing of a central bank who's going to keep it from going underneath 1.2. So geniusness would be, okay, let me just buy at 1.2. I'll put a stop loss underneath that by a little ways, and I should have a guaranteed trade, right? Well, that's what everybody did. Everybody bought into that idea. And one day, the Swiss National Bank came out and said, actually, never mind. And the market sold off. And this is like a 20% move in a currency exchange in a single day. It was about 19% on the exchange rate between the euro and the Swiss franc. And this, one of my podcast co-hosts was talking to me about, we were talking about just how this actually shut down. Oh, something happened. Can you guys still hear me?
Yep, weird. I can. Yep. I think you're cutting out a little bit.
Okay, weird. I think it might be me. I'm sorry about that. I'm not sure what's happening. Maybe some slowdown on our end. I think you can hear me now. Anyways, the point is the Swiss National Bank, they took it back. So when we get to the Bank of Japan situation now, I just be, I think it's really important to be cautious with, a central bank saying one thing, and if faith is lost in that idea that intervention can cause effect, there's a possibility that that continues to trend higher. So my idea would be actually bullish if price continues to break through that 150 mark on the dollar yen exchange. So that's my opinion. But yeah, good question, Mark. The last thing I wanted to just come back to you on that thing we mentioned we would earlier. You had some good trades this week. You want to just walk us through maybe one of them, and we can close it out from there? Okay, cool.
Sure. So 3 of them. First one was on the euro and the US dollar. They were all at the same time, basically. So the setups form at the same time on 3 different pairs. It was a simple trend continuation, simple break and retest setup. And basically plays the short order, 12 pips stop loss or 13 pips depending on the spreads, and then just follow the trade with the trade management rule that I use. And I was out this one for 1.7% on EJ. Same thing, same time, same sort of a setup continuation. This one was even better, to be honest. And this one was around 2.6%. And then the final one was on the pound. This one looked very good as well. I found this sort of a pattern on the pound tends to work out most of the time. So usually when you get an impulse like this one, and then you get a 1 candle pullback like this small blue candle, and then the next candle breaks the low, prints a clean close, meaning no wick, usually any sort of a break and retest that happens will actually continue trending. And that is exactly what happened, and I managed to get some percentage out of this one as well. So yeah, 3 very nice trades, even on a Monday. So what I found, Mondays are usually predominantly range bound days, but even on the Monday, if there are some nice trends, some nice impulses, I will get in because it's worth it. And I also had a question for you. So let's say for that Swiss trade, you were actually short and the price went down 20%. You think your broker would pay it out? What do you think would happen if you were in a trade and you shorted it just, let's say, a couple of hours or days before the huge drop?
Well, the thing is, I think that if you were to, so the first one is the nightmare. If you were long, which is what most people were, most retail traders were heavily long because, again, it seemed like a guaranteed trade. The people who were long, when that event happened, their stop losses are not guaranteed. And everybody who's listening, you should know this. A stop loss in the market is a market order to close you out at the best available price. But if the market gaps way past your stop loss, guess where the next available price is? It's where the current price is. It's not where your stop loss was. So the point is, stop losses are not guaranteed. You can use guaranteed stop losses on certain brokerages, but you're going to pay a ton of fees to your broker in order to do that because they know they don't want to take the risk for you. So that's the point. Anyways, in terms of would they honor you? Well, if you had traded on a brokerage that went bust in that event, which
some of them did, right?
You wouldn't have gotten paid out. I think that it depends on the government regulation stuff. If you had in the U.S., there's like brokerages. I think they're insured if you have U.S. regulation up to like $500,000. So you probably would have if you were on a U.S. regulated, or I don't know. I can't speak for all the other regulations, but I just know what the U.S. is. So in that case, you probably would have been safe. That's why, again, I vouch pretty much for, regulated entities like the ones that sponsor our content. Anyways, that is a good question though, Mark. That's actually a great question. I just
have one more thing to add. So my mentor, I believe, used Alpari broker, and he didn't even have a trade on. The broker went down, but he was insured up to a certain amount. So like 4 or 5 years later, he actually got a part of his money back. So it's always good to go with a broker where you are actually insured, right, up to a certain amount.
Yes, exactly. And yes, at Alpari, again, like I said, I know somebody who he's a Oanda senior market analyst and a co-host on the podcast that I go on. It's exact his situation. He was an analyst for that brokerage. It went down, and he had to move to a new company. So yeah, be careful, guys. Markets have all sorts of risks attached to them. In my opinion, the last thing you want to do is you want to work with, you don't want to work with something that's super sketchy, because if they go down, there goes your entire account. So you don't want to have 100% loss potential with brokerages. So that's where I do think regulation is important. And you know, I park the majority, almost all 99.9% of the money that I trade and invest with is in US regulated stuff. And of course, wherever you are, whatever jurisdiction you are, you know, qualify for, just look into that. It is an important thing to consider. But good questions, Marco and Miko. Marco, thank you both for joining me on the show today. I think we had a lot of good concepts and ideas to talk at least about that yen and the dollar moves that have been happening. I do want to thank you guys again, both for coming on, and also just making reference to this in the chat. We just dropped something there for you. You can subscribe to Marco or Miko on YouTube, or both, actually. They both have great content on their channels respectively, and I would highly encourage you guys to go show some love to both of their channels if you're looking for a little bit of Miko and Marco and their strategies beyond just what they show on the show. Please feel free to find them there. Miko, Marco, thank you both for coming on the show.
Thank you. See you next time.
See you guys. Always good to have both of those guys on again. Highly technical traders, but also, you know, very experienced, both of them. I mean, those were great brokerage related questions from Marco, and Miko had some great insights in terms of you know, looking for pullbacks and stuff on gold moves. I really liked both of their commentary here today. I do want to mention, guys, we have something here for you. Two things. We're going to drop 2 free channels for you guys to join here today. The first one is, and it comes with a giveaway, our free Discord channel. We're giving away a gold VIP membership this month to one person who joins. And if you click this link, join our free Discord, all you have to do to enter the giveaway for a chance to win is click that link and join the Discord. It is free to do, and we put out a ton of free value there anyways. So there's some helpful stuff that is waiting for you there. Take us beyond just the YouTube show and join our Discord community. And the other one is you can also join our Telegram channel if you prefer Telegram. Click Telegram. We share analysis for free in both each and every day. Myself, Frank, and Julie, we manage the readable content there for you guys to keep you up to date on what's going on in markets. So we'll drop the Telegram link as well here for you so that you can join that as well. There it is. Click that link, join Telegram. And again, there's plenty of free value there each and every day from our staff here at A1 Trading. We hope you have a wonderful rest of your trading day. Trade safe, and we'll see you back tomorrow. See you guys.
Before you disappear, one lucky person who joins the free Discord will win an upgrade to the VIP Discord for the rest of your mortal life. The VIP Discord features Nick and Frank's trade updates and analysis,
live webinars, chat rooms with traders from all around the world, along with so much more.
Click the link being dropped in the chat to secure your spot in the free Discord, and maybe you'll be our upgrade winner. We're dying to meet you.